US dollar index was trading at 104 just back in mid-March, now flirting with the 92 level. That is a dramatic slide in the US dollar index. And keep in mind, gold prices are priced in US dollars. So when that dollar is worth less, gold is worth more. Generally speaking, when we get close to a historic number like the $2,000 mark, at the very least, we will go and test it. But the way this is projecting, it looks like gold is going to eclipse that $2,000 mark fairly easily. We're currently projecting somewhere between $2,300 and $2,400 an ounce.
Well, for more, let's go to Marc Chandler. He's Chief Market Strategist at the trading firm Bannockburn Global Forex in New York. Welcome to the program, Marc. Now, it's interesting, isn't it? Just a couple of weeks ago when gold broke that $1,800 an ounce barrier, we were saying that that was a big deal. And gold prices up until a few days ago were in that $1,800 range. Now they're approaching $2,000 an ounce. Can you tell us more about what's prompted this surge in gold prices?
Sure. I think it's not so much the flight to safe haven or safekeeping, but I think that what's going on is that interest rates around the world are very low. You know, Europe and Japan have about $14 trillion of negative yielding bonds. In the US, before the weekend, our 10-year yield hit a record, closed, I should say, at a weekly record low. Our real interest rates are 10-year yield minus 90 basis points. So I think that given the low interest rates, gold looks attractive. And because interest rates are so low, the bond market's not offering much of a hedge to the equity market. So I also see some people buying gold as a hedge to their equity holdings, which, as you know, are rallying strongly as well. And it's not just gold in dollar terms that's strong, but gold has outpaced, the gold advance has outpaced many of the other currencies. And so gold, in terms of the euro, not as record high as the dollar, but it's close to it. And the same thing with the other major currencies. Gold is expensive no matter what currency you want to look at, because I believe interest rates are so low.
Interesting. Well, as you say, central banks around the world, governments around the world have unleashed trillions of dollars worth of money to combat the economic effects of this pandemic. So why is it then, with all this cheap money, we aren't seeing stock markets, for example, enjoy a similar boost, with the exception of perhaps Wall Street?
You know, it's interesting. I look around at what stock markets have recovered the most. And besides the US NASDAQ, I'd say the Shenzhen market in China is also up on the year. So I think that there's the economies are very weak, and we're going to get second quarter GDP from both the U.S. and the Eurozone this week, and we're looking at something like a 34%, 35% annualized contraction in the U.S. in the second quarter. So I think that the weakness of the economy globally has caught the market reluctant to really be pushing on equities, which is why in the equity markets that have rallied, we're seeing a really narrow breadth to it.
So one of the analysts that we featured in the story there predicted that gold could go as high as $2,300, $2,400 an ounce. Do you think they could go that high?
Yeah, so I think that for me, the way I'm trying to think about this is also relative to what's going on with the US dollar. And now that gold is in uncharted waters, we haven't seen these levels before, so it's very hard for me to have like a price target. But if I kind of convert my dollar outlook, a bearish dollar outlook, I think that the dollar has ended its third big rally since the end of Bretton Woods. We had the Reagan-Volcker dollar rally, we had the Clinton tech bubble rally, and then we're done with the Obama-Trump dollar rally. And if I'm right about it, still the early stages. Remember back in 2008, the euro, which today is trading around 117, 118, was up at $1.60. And so making some conservative judgments, I think that 2,400, 2,500, something like that seems reasonable given my dollar outlook and given the idea that interest rates will stay low for as far as the eye can see.
Okay, now when we saw the recent rally on Wall Street, particularly in the tech sector, some analysts were warning of a potential stock market bubble there, similar concerns in Chinese markets when they were rallying. But with gold prices rising, there's no concern there, is it? Because it is a tangible asset.
I think there's less of a concern, but though having said that, gold does have these history of these incredible rallies and these incredible downsides, bear markets for gold, which are just as punishing. But I do think that the idea of a bubble, it's hard for me to imagine a bubble like this, in a sense that is there a bubble in interest rates? Are interest rates going to suddenly rise? I don't think so. And I think that's really the key transmission mechanism here. So while other markets, we could see a setback in other markets. I mean, we've had quite a rise in equities since that March low. As I mentioned, bond yields are near record lows now. So these markets can correct. But a bubble, I think that it's kind of pushing it a little bit.
Okay, Marc Chandler from Bannockburn Global Forex in New York. Thank you again for joining us on the program.